This is the single most important topic within Bitcoin that has only just begun to be talked about. Until we get past this, the asset class itself is going to be wrapped up with a lot of perceived risk and real price volatility. And I'm talking over the next, 2 cycles, 8 years, maybe even 10 years. I don't think we're 15 years away. And maybe you've got a year, maybe you've got 2 years. Doesn't matter. All you have to do is crack, one juicy key and you're good. What if North Korea does this? The market's already pricing in the risk. And I think some of the sell-off right now is actually OGs starting to feel uncomfortable. It's quite a risky proposition if you're holding hundreds of millions of dollars of Bitcoin through this sort of event horizon that's approaching. Bitcoin has this 10 years of, I think, uncertain times, and the market will price this in years ahead of time. Archie. We see a lot of these OGs, like the big OGs are unlocking Satoshi era coins, that sort of thing. And we kind of saw this 2014, 2015, 2016. There was I don't know if you recall or heard the stories of the bear whale, where this guy put this massive sell order of thousands of Bitcoin near the bottom of the 2014, 15 bear market, and it got gobbled up in hours. And you could see it, but it was near the bottom. But there was other accounts. We didn't know who he was. There was another account of a whale that said, look, Bitcoin's going to go through the block size war. There's no consensus. It got very brutal. The decision, the background was that there was enough throughput and there was expected congestion on the blockchain. And the block size had to be bigger, and we had this massive, war over it, and it took until the tail end of 2016 to resolve, when SegWit got locked in, and then we had this great 2017 bull market. But all through up to there, whales were selling. They didn't know if it was going to survive that. In actual fact, if you recall, Michael Saylor, in his process of accumulating it, he knew that Bitcoin was tested and it got through its consensus mechanism, and all the parties involved could come to a consensus over moving the protocol forward. And it's been battle tested at that point. And we're going through that again, right? Like, we know quantum's coming. Core devs have one view of it. Oh, it's, decades away, potentially. And then we've got other people, particularly quantum researchers, that are on the other side of it. And so, and it strikes me that the core development, core devs, you could say they're the winners of the last war. They've built the cryptography, the signatures, everything. The whole thing is so robust. But I'm not seeing any of the people within the core dev community having any experience building and pushing forward the research in the latest quantum computers. Yeah, I don't think. My sense is the core developers, they don't act quickly as a matter of process anyway. You don't want to rush anything, which is valid. Mm-hmm. I think they firmly are skeptical of the speed at which Q-Day will happen, when the quantum computer of its day will crack Bitcoin's cryptography, derive the private key from a non-public key. And, I was talking to, he's a Bitcoiner, but he was also working for Google Moonshots, Google X projects, on the development side of, the quantum computers, in the application of quantum computers into, in his case, biomedical sort of processes, gene discovery, that sort of thing. And he attended the Presidio Quantum Summit where core devs um, and the experts, the quantum experts were there, and um, the the he observed that the core developers were very skeptical, but there wasn't enough entrenched knowledge there to be on a panel with these experts to be fact-based skeptical. And I think that there needs to be you know there needs to be a little bit, I would say, like quantum. Yeah, the core devs I think need to understand the other side of it, right? The latest breakthroughs, and like for example, you could, what was I was told was you could create a quantum computer 1 or 2 generations back from what's happening inside perhaps Google. But what you could do, just like we optimize chip circuits um, for Bitcoin's SHA-256 to create ASICs, you could optimize a quantum circuit potentially. Right, this is theoretical, but to really optimize it for Bitcoin signatures, and then you can set it running. Maybe you've got a year, maybe you've got 2 years. And it doesn't matter. Like the quantum computers that are being developed on the forefront are more general purpose, right? But if you take something a few generations back and you run it for a year or so, doesn't matter. All you have to do is crack, one juicy key, and you're good, And with that, there's like, if it's done in the West, yeah, it's, just the fact you've cracked the key, it could be considered stolen because you don't have legal title. But what if North Korea does this? So these are the conversations that are being had. And so I don't think we're 15 years away. I think that like we're going to get into some um, unknown space, and I think it's going to be a lot faster, and the risks are going to climb. And the the fact that people are talking about this is going to put off investment ahead of time. The market's already pricing in the risk, and I think some of the sell-off right now is actually OGs starting to feel uncomfortable. Because if you're thinking of an OG sitting on these bags, I would expect there's not one OG that's not market savvy, having sat on Bitcoin for good part of, a decade, maybe even 16 years, likely hundreds of millions, billions of dollars there. They're going to know that if we're approaching a standard 4-year cycle, we're going to wait till 2026, which would be the standard bear market, then 2027 to recover. Maybe we can get back to where we are now at, back in the day it was 120, right? Maybe it'll take till 2028. Well, 2028 is getting pretty close to, optimistic Q day. And so, like, it's quite a risky proposition if you're holding hundreds of millions of dollars of Bitcoin through this sort of event horizon that's approaching. And so I think this is the single most important topic within Bitcoin that has only just begun to be talked about. Until we get past this, and of course we will get past this, the asset class itself is going to be wrapped up with a lot of perceived risk and real price volatility. And I'm talking over the next, 2 cycles, like 8 years, maybe even 10 years, until it gets hardened up. And so, yeah, like we talk of Bitcoin as a safe haven. Its underlying properties is that, but it's not recognized as one because it trades risk on currently because it's too small, it's too young, and it needs to get to a certain market cap, similar to gold. It needs to get older because it's only 16, 17 years old, and that's nothing compared to, 6,000 years of gold, 10,000 years of real estate, whatever you want to call it. All these assets the traditional market looks at, equity markets are centuries old. It takes time for institutions to understand it and be confident in it. So we've got to get through growing bigger, having more burn-in time, and we've got to get through this quantum thing because there's this big cloud. If you're an institution, you're going to come in and look at all the risk factors, including quantum. And they're not going to be experts at it either, but the fact that it exists is going to be a blocker. So Bitcoin has this 10 years of, I think, uncertain times until quantum is locked in and fixed. And the price is going to be priced, the market will price this in years ahead of time. So, yeah, that's my view.